Today, we will be deep diving into certain important concept, which is to succeed in stock market. Interim, we may have certain volatility in the market, or we may have certain bottlenecks in investing into the Indian stock market. But yes, overall, how should be your journey? And as we know, every company has a particular life cycle. So how to travel during that journey and how to succeed, we will be learning today, right? So let me share my screen and we will be discussing about the entire roadmap to succeed in stock market investments, right? First of all, the most important point is either you are a short term investor or a long term investor. Your focus should be on price and volume, which means any company where there is a huge volume that is coming up, which means more number of buyers are there or a lot of buying interest is there, which means the institutions, either domestic institutional investors or foreign institutional investors, when they're adding up more, that is where we want it to be. So let's say you are analyzing a stock on a daily time frame, which means yes, you are looking at a stock for short term, right? So whenever you are investing for short term, which is either for couple of days, couple of weeks, you look under daily chart. If you are looking for a long term investment like 1 year and above, 3 years, 5 years and above, you look under weekly or even monthly charts, right? Monthly charts. So whenever the stock is moving like this, whenever there is an up day, right? This is called as an update, it's a positive day. And this is called as a negative day where the stock has fallen down, right? So during up days, we need more volumes. Even this is an update. This is an update, right? We need more volumes, which means more buying interest, right? Buying interest. So volumes speaks a lot, right? Volume speaks a lot. And on a weekly chart, when you're analyzing for long term, more up weeks on increased volume than down weeks in volume, right? So whenever the stock on that particular day has given a positive candle, it should be with more volume. And whenever a good up move is coming up with good volume, it means there is a good institutional entry, right? When the domestic institutional investors or foreign institutional investors are entering, it will be reflecting with the volume, right? With the volume. So that's why normally people look at only the price, but volume speaks a lot, right? Volume speaks a lot. And the trend should always be in your direction, right? Trend should always be in your direction, which means you may invest into a stock, but if that particular stock is not trending, it's in a downward trend, you should either reduce your position there or completely get out of it, even though it is fundamentally very strong, because there are certain things which are not working in its favor. When you are traveling, right? When you are traveling on a boat, you should always sail in such a way where the wind is flowing in that direction. You should get your boat in such a way that your journey will be much easier. So even in the stock market, be in the sectors which are trending, right? Be in the stocks which are trending. And let's say yes, there is a lot of capital expenditure into infrastructure, there is a lot of capital expenditure into the defense, railways. So we sail in those sectors, right? We sail in those sectors. So all these above points, if you look at it, sir, yes, I've invested in a stock, there is a good volume that is coming up and there is a good price action also happening, but the stock is a serial gapper, which means every day it is opening up with 5% circuit, right? 5% circuit. So this is where majority of the retail investors get trapped. So I want you to observe this, right? Let's say, sir, I've entered a stock and on the next day it is 5% gap up. You are very happy. Another 5%, you are very happy. Sir, every day it is moving by 5% gap up. So these are called as serial gappers, right? Serial gappers. So it's good to be there, but do not be greedy, right? Do not be greedy. So if you have made some decent profit, right, maybe like a 20 or even a 25 percentage and above, start booking your profit, because whenever there is a serial gapper, you should be more cautious. And when the downfall starts, it will be a gap down, which means it will be falling by 5 percentage or even 10 percentage lower immediately. And the worst part is you will not have any buyer. Even if you want to sell it, you don't find a buyer. So that's the worst part of it. So yes, even if you are there, even if your existing investments has given a gap up, right, that's the point where we'll be little bit more cautious. And sir, I'm a complete beginner, I see a stock every day moving up by 5% up or 10 percentage, it is cutting the circuit, can I enter? For a beginner or a conservative investors, these are not the stocks you should be looking at, right? These are not the stocks you should be looking at. And even these stocks, the number of outstanding shares also will be less. So this can also be called as illiquid stocks, right? Majority of the stocks are illiquid, which means there will not be sufficient number of buying and selling happen. It will be like a very closed, right? And majority of these trades are like insider trades, right? Insider trades, which means within the management, right? Maybe they have it in their other names, right? Like some dummy names, and artificially they jack up the price so that it will attract all the retail investors. And when you're trapped at the higher price, they keep selling, right? They keep selling. Okay, so be very careful about these serial gappers, and don't fall in love with the stocks, right? Don't fall in love with the stocks. Sir, I have been invested in a company, maybe I am working in the company for many years, and the stock has depreciated by 10%. The stock has fallen down by another 30 percentage, right? So I will hold this stock for life, right? So rather than loving a stock or rather than loving a company, date the stock. So if you feel weakness in that company, reduce your position, and that money you invest into a company which is trending, right? Which is trending. So what happens in this entire fall, rather than you getting your money stuck in it for years together, you can make use of that money into a better company. That's called as opportunity cost. Sir, I've invested in 2020, in 2024, whatever is my purchase price, today also it's the same price. I did not lose or I did not win. I'm okay with that. But if you ask me, I'll tell you in this 4 years, you have lost many opportunities. That entire amount you have invested 2020, instead of you getting stuck in this entire 4 years, if you would have invested into a better company or in a better sector, you should have made money. So even though you have not faced loss there, you have had opportunity cost, right? You have had opportunity cost. That's why don't fall in love with the stocks. If you see some weakness, move to a better sector or to a better company. Now what we will do, we'll discuss about some of the important technical factors, right, to look at things which we have discussed above. First factor, stage analysis, which I hope every one of you have a fair idea. So every company, if you see this particular chart, has 4 stages, right? This stage 1 is a very initial stage called as basing stage. Stage 2 is called as the advanced stage, and this is the stage where we will be more, right? We will be averaging up. We would love to make money in this stage 2, right? This is a very important stage 2 which we will observe. Stage 3 again is a consolidation stage, which it will be flat. It will neither increase up nor decrease. It is a stage 3. And stage 4 is the decline phase or the distribution phase, right? This is the phase we would not love to be in. So whoever are averaging down, sir, I have entered here, I have entered here, I have again entered here, they are trying to catch a falling knife, right? They are trying to catch a falling knife. So yes, This stage 2, the uptrend is what we will ride the stock more. And stage 4, this is the stage which we avoid being there. Or even if we have entered, we will exit ASAP as soon as possible. Right? More money is made during stage 2. So yes, stage 1 is an early phase, pioneering phase. This is the phase where the R&D works, research and development of a company would be happening, or a company would be startup, right? It is just increasing their sales. Stage 2 is an advancing phase, which means there is a good price and volumes are also increasing in the stock. Normally, what people think, sir, the stock is at a 52-week high. Can I enter? Because it has already appreciated, right? If the earnings is good and if the company last quarterly results are good and the company's sector is trending, right? The sector is in limelight. The sectoral tailwinds are there. Even though it's at a 52-week high or all-time high or at a lifetime high, we should be there, right? We should be there. When the company is in growth phase, that is the phase you should be traveling, right? And when you are in this stage 2, increase your positions, because when the stock is a winning stock, we win big, right? And more money is made during this stage. Stage 3 is a consolidation phase or a sideways phase, right? Maybe after a couple of quarters or couple of years, the sales has reached the maximum point, and so the revenue wise is neither increasing nor decreasing, right? So this stage 3 is where the entire basing happens, right? Or it consolidates, or it's a sideways phase where we will watch out. If there is a new products that are being added or there is a new revival happening in the business, it will again move into stage 2. We can again re-enter. But if it is going to stage 4, a declining stage or a falling or a bearish zone, we reduce our positions, we come out of it, or even it's better to exit. So the mantra is, when you are winning, win big. When you are losing, lose small, right? That's the mantra, right? When you are winning in a stage 2, increase your positions, make the winner big. If you are losing because of any reason, you have invested stock, the stock is declining, you lose small, right? You lose small, right? So win big and lose small is the mantra in stage analysis or in the entire life cycle of a company. And lastly, India VIX, the volatility index, which is very important to assess the market heat, right? The market heat, like how you enter your stock name or how you enter your sector name in TradingView, you can just enter India VIX, and whenever India VIX is between 10 to 16, it's a low volatile, 16 to 20, medium volatile, right? Even if you're a conservative investor, this is a segment, right? This is a segment where you can comfortably be, right? Comfortably be. And if the volatility is increasing, right? Is increasing, let's say more than 20, right? Or even it's in between 20 to 28, it's a high volatile zone, right? It's a high volatile zone. And during this period, we will be in cash. And please understand, cash is also position. There are many people, sir, I always wanted to trade in the market. I have balance in my account, so I cannot control my emotions. I just wanted to play. Even though there are no good opportunities, I just wanted to invest randomly. No. Like how you invest into a stock, investing into a stock is a position. Similarly, being in cash is also a position. Cash means you are not investing into any stock. Your money is there in the demat account or savings account, right? Cash is king, right? You have to get the right ball to hit it to boundary. Not all the balls you hit it to boundary. That's where you get bowled, right? So certain levels where the market is not very conducive, you have to hold, right? If you just enter India VIX in TradingView, you will know, right? You will know what is the volatility levels and the short-term wise, because this is something is the heat map, right? I call India VIX as the heat map, right? Heat map of the market. So whenever you see or you wanted to assess the overall volatility in the market, you take advantage of India VIX, right? India VIX. It's like how you enter your stock or the sector name, you can check the volatility also in the market. And lastly, as a successful investor, what are certain things you have to delete, right, in your entire process is one, avoid FOMO, fear of missing out. Sir, I've been tracking a stock or I've been tracking a sector. It is like it has advanced too high. I'm not very comfortable, right? Let's say you have had a consolidation and after that the stock has given a breakout, right? So this is a strong breakout and again it has advanced to a very high level, right? Very high level. Ideal entry is during the breakout, but yes, you have missed it. It has almost advanced by around 15%, right? So trying to enter here, which is like a FOMO, as everyone are making money, so I also wanted to enter, right? Do not have FOMO in investing. And stock market is a regret machine. Sir, I have been tracking this company, sir, right? X Private Limited, I have been tracking. But because on that day I'm busy with my meetings or my boss has given an important project, I was not able to track the stock for 3 days. And in these 3 days, the stock has moved by almost 15%. I regret my decision. Accept the fact stock market is a regret machine. You always regret. And please understand, you do not need to be in all the positions. You do not need to be in all the stocks. You need few multi-baggers in your portfolio to be good. There will be multiple opportunities that will be coming. So understand, stock market is a regret machine. You will have certain positions which you will regret that you have not entered. But do not worry. Do not be in that FOMO and enter at a very steep price. Yeah, steep price. And old school of thinking, right? Or the old system of thinking, which is averaging down, right? Sir, yes, the stock from 100 it came to 80, from 60, from 50, 40, right? So I'll be catching a falling knife. I'll be averaging down. No. Always average up your positions. Do not try to catch a falling knife, right? And negative people, like how you have to avoid negative people in your life to stop your, if you're surrounded by a lot of negative people, right, or unsuccessful people, or someone who are like, I do not have any goals in my life, I do not have any targets in my life, I do not aspire anything, you also become like that. Similarly, you watch a lot of news channels, right, lot of debates where everyone are speaking about negativity, you are also closed there, you also become completely negative. Rather, look for opportunities when there are dark days. What are the companies which are exhibiting strength, right? So avoid negativity, avoid negative people, right? Avoid negative news, right? That those are the times the market is volatile, right? Focus more on the opportunities rather than getting into the negative spiral, right? Get rid of unwanted apps. Stop all your notifications, right? The news channels, unwanted media, right? And even media, I call it as a paid media, right? I don't know how many of you know, there are many social media platforms where they are paid to artificially jack up certain companies, to artificially give more importance to specific stocks which are closely managed, right? So get rid of all these unwanted things and declutter yourself. So if you are focused, if you have a clear focus, you can enter stocks with a lot of clarity, right? And always affirm yourself that I'm a great investor, right? If you say to yourself, I do not know the right picking, right? I'm a lot of bad luck person, right? So whenever I enter a stock, the stock gets declined. Whatever you ask the nature gives you the same, right? That's why I say doing the affirmations every day will make you a more positive person, and that will reflect in your investments also, right? Always affirm yourself that you are a great investor, right? That you are a great investor. So all these points what we have discussed, if you are following to the core, there are a lot of chances of you becoming a successful investor, right? Just to summarize, ensure you be in the market than being out of the market. And you need not be in the stocks every day. When you do not find an opportunity, just observe the market and be in cash. Cash is also position. When there is a lot of volatility, when there is a lot of geopolitical tensions that are happening, you need not take aggressive bets. Play cautiously, right? Market is beyond everyone. Never say market is wrong, I am right? No. Accept market. Market teaches us and learn, right? Learn and do not regret. Sir, I have seen some positions which has given like a 1x, 2x. I have not been there. So, stock market is a regret machine. If those are some of the stocks you missed, there are a lot of opportunities which will be coming. And the best thing what you can do, what are the characteristics of those stocks which has given extraordinary return? So if you study that pattern, the same pattern will be repeating in other companies. Please understand, history repeats in one or the other format, right? In one or the other format. So if you study the pattern, that will be reflecting in the other companies as well, right? So I hope everyone love this discussion, and please understand market gives ample number of opportunities to everyone to have many more multi-baggers, for someone who have patience, for someone who have a positive mindset, right? Positive mindset, and affirm yourself that you're a great investor and a great trader, right? Good.